Well, welcome, gentlemen, to our roundtable this morning, where we're looking at Europe and events in Europe and the impact on funds management strategy. Greg, Peter's talked about a little bit of the downside there. Where do you see the downside in terms of the sort of processes you guys are using?
So there's two main ways of thinking through the negatives in our view. One is if you're a business and your top line is derived from these local Europe economies that have very low growth, maybe it's negative growth, people are out of their jobs, so their household budgets are under a lot of pressure. That means that demand is weak, that means your top line is weak, and your ability to grow your profits is very minimal. So that has ramifications for what your business is worth. And maybe that stays that way for a long time. So maybe the appropriate valuation parameters are lower than in other parts of the world where the growth prospects are greater. That's the more benign of the two negative possibilities. The more scary one in our view is if this transfer union that is developing breaks, if the political will in the strong countries to continue to funnel money to the weaker countries breaks down, or if the weaker countries want to get free from record high unemployment and this internal devaluation, which is very painful to the citizens of these countries. If that fractures, we don't have a lot of historical comparisons to make about what it means for businesses if one of the key Eurozone countries decides to break free. And it would be our observation that the capital markets would take a wait-and-see approach on that. And you could see a lot of volatility in stock prices. And so you want to be very careful about that exposure exists in Europe, whereas it doesn't exist in a lot of other places around the world. And factoring that into your price to value comparisons makes a lot of sense if you want to be careful about holding on to value before you think about making money in the markets.
So you'd agree with the thought that the election in Germany and more or less a continuation of the Merkel regime represented a good thing, given that it was the Germans in particular who might have changed tack on the degree to which they would support the EC and bail out some of the lesser economies.
I don't think it's clear that what is going on is at all really sustainable. The Southerners, this process of devaluing, it sounds easy, but if you have half your youth unemployed, you're under crushing debt burdens, your currency is actually going against you as the euro goes up, that is socially very challenging, and that is essentially being imposed by Merkel. And so whether that is a good policy, I think, is very much debatable. That basic deal of bailouts in exchange for austerity doesn't seem to be working very well. And so I wouldn't necessarily say her re-election is necessarily great from that perspective.
And with that, gentlemen, that brings the roundtable to an end. Thanks very much.